Hey everyone, welcome back to Steve's View. In the past few weeks, global attention has been drawn to a series of seemingly separate developments: escalating tensions in the Middle East, rising oil prices, renewed debates in Washington over the scope of presidential war powers, and the quiet postponement of a high-stakes summit between the United States and China. At first glance, these events may appear disconnected: regional conflict on one side, great power diplomacy on the other. But when viewed together, they suggest something more consequential: a potential reordering of strategic priorities at the highest level of the international system. What we may be witnessing is not simply another regional crisis, but a moment in which short-term instability begins to reshape long-term global strategy. To understand why this matters, it is useful to begin with the most immediate variable: energy. The Middle East remains one of the most critical nodes in the global energy system, and any disruption, whether real or anticipated, tends to reverberate quickly through international markets. Recent reports of attacks on energy infrastructure and the broader escalation of conflict have already pushed benchmark oil prices above $100 per barrel, with some projections suggesting sustained volatility if tensions persist. This is not merely a matter of higher gasoline prices. Energy costs function as a multiplier across the global economy. They affect transportation, manufacturing, food production, and ultimately inflation expectations. Central banks, already navigating a complex post-pandemic environment, now face an additional layer of uncertainty. The decision by major institutions, the Federal Reserve, the European Central Bank, the Bank of England, and the Bank of Japan, to hold interest rates steady reflects not confidence, but caution. Policymakers are effectively signaling that they are waiting to see whether this shock will prove temporary or structural. At the same time, the United States finds itself in a familiar but increasingly complicated position, balancing its role as a global security provider with domestic political and economic constraints. Statements from senior officials indicate that Washington is considering a partial easing of restrictions on Iranian oil exports, even as it continues military operations in the region. This dual-track approach highlights a deeper tension in U.S. policy. On one hand, there is a desire to maintain pressure on Iran and deter further escalation. On the other hand, there is a recognition that prolonged disruption to energy markets could impose significant costs, not only on the global economy, but on the United States itself, particularly in an election-sensitive environment where inflation remains politically salient. The request for additional defense funding, reportedly in the range of hundreds of billions of dollars, further underscores the scale of the commitment being contemplated. This raises an important question about strategic bandwidth. Over the past decade, U.S. national security strategy has increasingly emphasized competition with China as the central organizing principle of foreign policy. This shift has been reflected in defense planning, alliance building in the Indo-Pacific, trade and technology restrictions, and diplomatic engagement. However, history suggests that the United States rarely has the luxury of focusing on a single region or challenge at a time. The re-emergence of a major crisis in the Middle East complicates this prioritization. Resources, whether military assets, diplomatic attention, or political capital, are finite. Increased engagement in one theater can, over time, limit flexibility in another. It is in this context that the postponement of the U.S.-China summit takes on greater significance. Official explanations point to scheduling conflicts and the immediate demands of managing the Iran situation. Yet the symbolic and strategic implications go beyond timing. High-level summits are not merely diplomatic formalities. They are instruments for setting agendas, signaling intentions, and managing competition. The delay introduces uncertainty into an already fragile relationship, particularly at a moment when both sides face economic pressures and have incentives, at least in theory, to stabilize ties. Trade between the two countries remains substantial, hundreds of billions of dollars annually, but tensions have intensified in recent years, including the imposition of tariffs, export controls, and restrictions on critical technologies. The absence of direct engagement at the leadership level reduces the margin for miscalculation. From Beijing's perspective, the situation presents a complex mix of risks and opportunities. On the one hand, instability in the Middle East threatens China's energy security as it remains heavily dependent on imported oil, much of it from the region. On the other hand, a United States that is increasingly absorbed by conflict elsewhere may have less capacity to sustain pressure in the Indo-Pacific. This does not imply a simple zero-sum dynamic, but it does suggest that time is often an underappreciated variable in international politics, may be redistributed in ways that affect relative positioning. Strategic competition is not only about capabilities, but about sequencing and attention. Another layer to consider is the internal dynamics of the United States political system. The recent Senate vote, rejecting an effort to limit presidential authority over military operations, reflects a long-standing debate about the balance of power between the executive and legislative branches in matters of war. While the resolution's failure does not in itself expand presidential authority, it does indicate a degree of congressional acquiescence, or at least division, at a critical moment. Historically, periods of external conflict have tended to strengthen the executive branch, both in perception and in practice. Whether this pattern will hold in the current environment, characterized by polarization and institutional distrust, remains an open question. Beyond immediate policy decisions, there is a broader structural issue at play: the increasing interconnectedness of regional crises and global systems. The idea that a conflict in one part of the world can quickly influence economic conditions, political calculations, and security dynamics elsewhere is not new, but it is becoming more pronounced. Supply chains, financial markets, information networks, and technological dependencies create pathways through which shocks can propagate rapidly. In this sense, the current situation can be seen as a stress test of the international system's resilience. How effectively institutions, alliances, and markets absorb and adapt to this shock will have implications that extend well beyond the Middle East. Technology also plays a role in shaping these dynamics. Modern military operations rely heavily on systems such as GPS for navigation and targeting. Reports from recent conflicts indicate that these systems are increasingly vulnerable to interference, including jamming and spoofing. This has prompted renewed interest in alternative navigation technologies, such as quantum-based systems that rely on measurements of physical fields rather than external signals. While still in development, such technologies could, over time, alter the balance between offense and defense in electronic warfare. More broadly, they illustrate how technological competition intersects with geopolitical competition, adding another dimension to strategic calculations. Returning to the economic dimension, the potential for sustained high energy prices raises concerns about inflationary pressures at a time when many economies have not fully stabilized from earlier shocks. Higher costs can erode consumer purchasing power, reduce business investment, and complicate fiscal planning. For emerging markets, which often have less capacity to absorb external shocks, the impact can be particularly severe. Currency volatility, capital outflows, and debt sustainability issues may re-emerge as central concerns. In this environment, coordination among major economies becomes more important, yet also more difficult. Given geopolitical tensions, one of the less discussed but equally important aspects of the current situation is the question of narrative and perception. How governments explain their actions, both to domestic audiences and to international partners, can influence outcomes. In the United States, the framing of the Iran conflict, the justification for military engagement, and the linkage to broader strategic goals will shape public support. In China, the interpretation of U.S. actions may inform decisions about diplomacy, economic policy, and regional posture. In Europe and elsewhere, allies and partners are assessing not only the specifics of U.S. policy, but its consistency and predictability. This brings us back to the central theme, the potential reordering of priorities. For much of the past decade, there has been a growing consensus among U.S. policymakers that competition with China represents the defining challenge of the 21st century. This has led to a reallocation of resources, a reconfiguration of alliances, and a reframing of economic policy. However, the persistence of other crises, whether in the Middle East, Eastern Europe, or elsewhere, suggests that the international environment remains multipolar not only in terms of actors, but in terms of issues. No single framework can fully capture its complexity. In practical terms, this means that U.S. strategy may need to operate on multiple tracks simultaneously, balancing long-term competition with short-term crisis management. The difficulty lies in ensuring that actions taken in response to immediate pressures do not undermine broader objectives. For example, decisions related to energy policy, sanctions, or military deployment in the Middle East could have indirect effects on relations with China, either by altering economic conditions or by signaling shifts in priorities. Conversely, the state of U.S.-China relations can influence how both countries approach other regions, including the Middle East. Looking ahead, several scenarios are possible. If the conflict in the Middle East escalates relatively quickly, its impact on global strategy may be limited, though not negligible. Energy markets could stabilize, and diplomatic engagement between the United States and China might resume with renewed urgency. If, however, the conflict becomes prolonged or expands geographically, the implications could be more significant. Sustained high energy prices, increased military commitments, and heightened geopolitical tensions could create a feedback loop that reinforces instability. It is also worth considering the role of other actors. Regional powers, international organizations, and non-state actors all contribute to the evolving landscape. Their decisions can amplify or mitigate the effects of major power actions. For instance, coordination among energy producers could influence price dynamics, while diplomatic initiatives by third parties might open channels for de-escalation. The international system is not solely shaped by the largest states, even if they play a disproportionate role. In conclusion, the current moment illustrates the difficulty of maintaining strategic focus in a complex and rapidly changing environment. The escalation of conflict in the Middle East, the resulting pressures on energy markets, the internal Ds within the United States, the postponement of a key subbeat with China are not isolated developments. They are interconnected elements of a broader process in which immediate events interact with long-term trends. Whether this process leads to a lasting shift in global priorities or proves to be a temporary disruption will depend on how governments respond in the coming weeks and months. What is clear is that the margin for error is narrowing and the costs of miscalculation are rising. Thanks for watching.